why net proceeds analysis is a serious wake-up call for most business owners. So let me start by saying, what is net proceeds analysis? Okay, net proceeds is pretty much what it sounds like. After all your business obligations, liabilities have been taken care of and taxes have been paid, this is the net number available to you to do with it as you please. So let me start off with a net proceeds calculation, and let's work with calculating the enterprise value of your business. In this case, for simplicity's sake, let's just assume that the seller's offering price is your enterprise value. Second, let's say that we agree with the buyer to sell the business for $10 million. It's very rare that you would actually collect that $10 million. Why? Well, there's all kinds of different adjustments that have yet to come. Starting with, you'll have something called working capital adjustments. Businesses are sold on a cash-free, debt-free basis. But what they forgot to tell the business owner, that cash-free does not mean that you don't leave working capital in the business. That means that you have to leave accounts receivable, accounts payable, you have to leave inventory and accruals within your business for the business to continue to operate. So the concept of you coming in and speeding up your receivables and collecting them and slowing down your payables, this is the buyer's protection to make sure that you leave an adequate amount of working capital within the business. The next item that's going to sort of come off of the purchase price would be unrecorded liabilities and accrued liabilities. These are off the balance sheet liabilities, like essentially accrued wages, salaries, vacations, and so forth. The third element in the net proceeds analysis is holdbacks and escrows. Almost always, a savvy buyer will demand that a certain percentage of the purchase price is withheld either in an escrow, typically in an escrow account, to minimize the buyer's risk from misrepresentations by you for your operations or other representations and warranties that you will make about the business. The next element of your net proceeds would be an earnout. So earnout's typically what buyers and sellers use to bridge the gap of valuation. You think your company's got a lot of momentum and you want to harvest that momentum, and the seller wants to minimize their risk if the performance does not happen. So you would essentially agree to a certain level of an earnout, which is paid on various different variables. The next level of calculating net proceeds will be your actual taxes. The next level is essentially your own obligations. And remember, at this point, you've already paid tax. So to the extent that you have business debt, to pay that principal off, it's being paid with after-tax dollars. And we will remove that as a line item. And the last item is fees, expenses, and commissions for your advisors and due diligence fees and things like that. So once it's all said and done, you may find that the actual net proceed number that's available for you to use is a lot less than what you had thought. So my team and I, what we do is when we come in, we typically do a net proceeds analysis up front to understand kind of a range of what you can expect from the sale of your business. And sometimes the sale may not be the right thing for you. So we essentially listen to you and your priorities and try to align your personal, family, business, and financial goals. And to the extent that we have some time, we will help optimize and posture you in the right manner so you can get maximum value for your business. Rare Brain Capital helps companies improve performance and sell for maximum value. How ready is your company to grow or to sell? Want to know how you're doing? Get your free score plus customized report in just a few minutes at no cost or obligation. Visit rarebrain.com/score.